Hey everyone, Chatty Man Dan of the Chart Guys checking back in after taking a couple days off to end last week. So the bulls showed up Thursday on the back of Fed comments, followed through big day Friday, followed through this morning, and then finally ran out of juice midday before rolling over into hourly consolidation into the close. So that gave us some bearish reversal candles on the daily time frame on a number of names. And where we stand right now is, again, we got to go time frame by time frame, because we have, technically speaking, monthly consolidation is underway. We broke the low of February, but it's unconvincing at this point. If it's going to be convincing monthly consolidation, the bears must confirm a weekly downtrend, just like the weekly bounce needed weekly, or I should say the monthly bounce needed weekly uptrends to be convincing. So the goal for the bears into end of March, into February, no, wrong way, April, is to confirm the weekly downtrend and keep monthly consolidation underway. The goal for the bulls in the short term is to confirm a daily uptrend. We technically have set a weekly high or low. We broke the high of last week, but we don't have any confidence that that weekly high or low can follow through until we have a confirmed daily uptrend. So if we break the low of today tomorrow on the S&P 500 and the NASDAQ and a bunch of individual names, then the daily consolidation is underway. We look for the high or low, we watch the retracement size, and we look to then see, can the bulls confirm the daily uptrend to follow through from the weekly high or low? We are in a weekly uptrend. It's up to the bears to confirm a weekly downtrend to change that. Bears would love to see all major sectors at the low of the day at the same time during this daily consolidation. Anything other than that, and we will be looking for a daily high or low to be the most likely result of this pullback due to the size of the bounce. So you got a lot of space to work with to try and form that daily high or low. On the hourly, we are technically still in an uptrend. Ever since Thursday, on this futures chart, we've set an hourly high or low every period of consolidation here. And we got another one right now. Excuse my throat. Red tide in the Gulf Coast of Florida. Do some research before you go, because it's going to be bad this year. So, S&P 500, the bears are hoping this is a head and shoulders. Left shoulder, head. If we hold support and bounce from here, have to confirm the hourly downtrend. Because again, technically this is an hourly uptrend still, but it's more of a pullback than the bulls would like to see. It's more retracement than is healthy, because now we have space for the hourly lower high. So I have no idea the direction I'm going to be looking tomorrow. It depends on where we open. If we're opening a bit higher, I'm scouting hourly lower highs in a number of names. If we open lower, the daily consolidation will be underway, and we'll be keeping an eye out for hourly oversold conditions in a number of names. NASDAQ is very similar. Bearish reversal doji on the daily candle, but still an hourly uptrend. Bears must confirm an hourly downtrend for the daily consolidation to be underway. A lot of space for a lower high to be the result of the next bounce. The shift happened today with a 15-minute high or low, and then we confirmed a 15-minute downtrend. S&P 500 was pretty much a double top at the high of the day, and then confirmed the 15-minute downtrend. Again, it was all bull on the morning, and then losing the 15-minute uptrend shifted that momentum for the bears to take over. The dollar. So the dollar is a daily uptrend still. Broader market bulls want to see a bear break of 104.09, which would confirm a little daily downtrend. We know that the dollar is generally inverse to the broader market, certainly not tick for tick, certainly not every day, but generally speaking, if you are bullish, the market, if you are bullish stocks, crypto, whatever, you want to see the dollar break this support. If you are bearish, you want to see the dollar hold this support level and bounce to try and form a tightening range. Natural gas. So this is the risk of natural gas. Again, there is no, this instrument was devised in the depths of hell for traders. It has great trading opportunity and volatility, but it will smash you in the face whatever direction you're looking in. And we've seen in the past, the hedge fund that blew up, and he put out the video of essentially apologizing for losing everybody's money because of natural gas. But natural gas gapped down open 8% last night when futures opened after closing extremely strong on Friday. And just like that, your leveraged ETF of oil is down 25% today. Again, it shifts so quickly. We knew natural gas consolidation was due on the daily time frame. We knew we just went 50% off the lows with no daily trend change. I was shorting natural gas Friday afternoon, and I stopped out break even. I was not going to swing it because we could have very easily gapped up 3%. But a little bit frustrating just because, again, I was building my short right up here, but at the end of the day, didn't see any sign of the bears, and so wasn't going to swing it over the weekend. So did take a bounce attempt on natural gas, ended up pretty much break even. Just a couple of these bounce attempts that I ended up stopping out on after taking a little bit of partial profit. And at this point, we will be watching for a number of things. Again, this is why it matters what time frame you're looking at. I'm scouting a daily high or low. I'm scouting a 4-hour low or high to be the result of the next bounce. Those are two completely opposite things, but they are based on different time frames. So we need to see a big enough 4-hour bounce to try and shape up a trend change if we're going to shape up a daily high or low. And right now the 4-hour bounce has not even started, so we can't even speculate as to how strong or weak a bounce it's going to be. But bigger picture, scouting the daily high or low, can the bulls confirm the first daily uptrend in months is what it boils down to. Got to be cautious, extremely volatile. That's why it's for day trading for me and not for swing trading. Because even if you're trading futures, that gap still smashes you. SMH, so we have some relative strength in some sectors like SMH and IWM where their weekly consolidation is healthier, but they had relative weakness today. So again, if I'm a bear, I want to see the stronger sectors fail this weekly bull flag and roll over to break to the lower low. So SMH, a little bit choppy on the daily perspective. You can go to the 2-day chart, maybe cleans it up a little bit. I'm really just sticking to the weekly. A break of 233.09 is a big win for the bears, and a break of 255.64 is a big win for the bulls. Look at the range. We had 1 week to end January, and we have fit a month and a day of trading within 1 week's range. That week had significant opportunity. The prior 4 weeks had way less opportunity. So for me, whenever I establish that there's a clear tightening range, I just mark those levels and wait for the break, and generally won't look to be trading within that tight range. Because again, it's just less opportunity. So we have a lot of those potentially shaping up in the broader market with where we stand right now. And so the bears are hoping that SMH is forming a weekly lower high. What do we need to have confidence that a weekly lower high is shaping up? Multiple red days in a row would be a start. NVDA keeps struggling at the 239 resistance zone. We technically broke resistance, but did not close above it. We have a dividend distribution tomorrow. Bears are hoping that longs will sell some positions after that dividend is locked in. Key support is 224.32. There was relative weakness in NVDA today after we rolled over. All bull after the initial morning, and then just a big pullback. A lot of space for an hourly lower high. So you could say NVDA lost the hourly uptrend when we broke the low of today, but now the bears have to confirm the hourly downtrend to follow through. Simple statement, if 224.32 holds as support, the bulls keep complete control of the daily chart. What do we look for when we have a bear break with no follow through or a bull break with no follow through? Either direction, we look for a potential rising wedge. So I'm keeping an eye on something like this. Support only has a couple of touches. I care more about the resistance trend line than the support trend line, but keeping an eye on it. Tesla, some relative weakness today. $200 psychological has been acting as support and acting as resistance. Now it acted as resistance on Friday, failed to break it this morning, broke the low of Friday today, only by 58 cents, but technically the daily lower high is set at 248. We're looking back down at 186.01. Bears would love to confirm daily downtrend follow through, and what's notable to me is Tesla divided by QQQ is on the verge of confirming the first daily downtrend since we started this bounce over a month ago. So Tesla is starting to see some relative weakness creep in. And today we hit the weakest that we have been relatively speaking, comparative to QQQ, in 2 weeks. So it's standing out. And again, the Netflix short that I was stalking was because of this pairing. Netflix divided by QQQ, monthly consolidation now underway. We saw the shift from relative strength into relative weakness, and it's remaining relatively weaker to start this week. Bears of Tesla need to see that happen. They need to see consistent relative weakness. They need to see it last multiple days. They need to see a big old pullback on this weekly chart. And it all boils down to Tesla needing to break 186. The financial sector broke 3605 resistance. Again, the weekly is holding EMA 12. The weekly is in an uptrend. Bulls must confirm the daily uptrend. The next 2 days are going to be pretty important. Retracement size on any daily pullback is going to be notable. Whether it's healthy and we get the daily uptrend, or whether we give back 65% of the bounce and shape up weekly lower highs. Tomorrow's a pretty important day. Tomorrow and Wednesday. So XLF, bears need to confirm an hourly downtrend, breaking the low of today tomorrow for daily consolidation to be underway. And again, a lot of these names look like daily consolidation is likely going to be taking place tomorrow. These are bearish reversal candles after a pretty significant multiple day bounce. XLV, daily EMA 12 resistance rejecting the price, the more clear daily downtrend among everything we've looked at. Bulls have a lot of proving to do, and they're not proving anything at this point. Daily uptrend needed. IWM, again, weekly holding EMA 12, but if we roll over, it had relative weakness today. At the moment, it's a daily uptrend confirming with zero follow through. Another red day tomorrow will increase probabilities that IWM is potentially shaping up to confirm a weekly downtrend. Biotech sector is a lead bear. Came close to breaking to the lowest level we've seen on this pullback. Weekly stair-step pattern 5 weeks in a row still intact. And just 81.38 short-term support from here. XBI divided by SPY shows us it is the weakest it's been in a month. 6 weeks. Lowest level means the weakest it's been compared to the S&P 500 since back here. Crypto names, crypto stocks started the morning extremely strong. A lot of volume, 8% plus moves, and then we gave it all back. 10% drop. So coin was a really nice equilibrium, tightening up. It broke bull, but major red flag for the bulls to close at the low of the day like that. So I know that these names, I'm going to be scouting hourly lower highs tomorrow. Whether we open higher, whether we open lower and then bounce, I'm scouting an hourly lower high because of how much space we have to form one. Coin, MARA, Riot, all tons of space for an hourly lower high. Netflix, tons of space for an hourly lower high to be the result of the next bounce. That's where I have clarity heading into tomorrow. So those are the trades that I'm keeping an eye out for tomorrow. Riot, I was a bit frustrated today. I had a good amount of break-even trades today. And Riot was the one that got away. And I was shorting Riot, looking for a temporary top, just with extreme moves. And this wasn't related to Bitcoin. Bitcoin wasn't doing much for the bulls today. And it wasn't really related to the NASDAQ. Yes, the NASDAQ was going up on the morning, but this was crypto names. Very notable bull volume standing out. And I was shorting Riot. And, I had I enter a short and I sell partial. And then I re-enter half. And I ended up, the position that I was trying to hold, I ended up looking for this 5-minute lower high, entering bearish, needing 668 to break to confirm the 5-minute downtrend, and I stopped out here right before we rolled over into a 5% plus pullback. It ended up being like a 7% pullback. That's my day right there. That's everything I could want on the day. And in hindsight, zoom out, it was a 15-minute lower high and lower low. But it was, honestly what it was I made maybe 3 attempts, chopping around, break even. I had break even, natural gas bounce attempt. I had a biotech sector bounce attempt because I was looking for it to be a laggard bull. Biotech sector was testing the low of yesterday. The broader market bulls were just taking over on the morning. So I entered this bounce that never got going, sold half, tiny win, sold the second half, tiny loss. Long story short, I had a ton of break even, nothing going on, no flow state, just chopping around. And so once I stopped out there, it's like, all right, well, that's now my fourth break even trade or insignificant trade on the day. And it was getting to lunchtime. And so I just gave up on it and was like, all right, I'm taking a break from the computer for a bit. And then by the time I came back, didn't find a spot that I liked, as that trade was already running away without me. So that's just the way that it goes. Insignificant day. And we'll try and get that flow back tomorrow. But no flow today. Hourly lower highs on watch on a bunch of names. CCJ uranium name, keeping an eye out for a possible head and shoulders here. Big red day today. All about 2647. If 2647 breaks, the head and shoulders confirms. And why I'm watching this head and shoulders is it aligns with the longer term time frame. Because if that head and shoulders confirms, it's a monthly lower high compared to 3117. And we then look for monthly equilibrium that's a year in the making to continue tightening up. So CCJ is going to be looking for an hourly lower high to be the result of the next bounce. Netflix, CCJ, crypto names. And that's pretty much all I'm going to be watching. AI bulls had a huge bullish reaction to earnings on Friday. We rejected from 3092. And AI, if we break the low of today tomorrow, daily consolidation will be underway after that notable rejection. But the volatility is back. Volatility disappeared. Volatility is back. Tight ranges breaking lead to volume, volatility, and opportunity. Gold watching for daily consolidation. Silver is still weaker, struggling at EMA 12 resistance, and the miners have already started daily consolidation. The miners started the bounce first. They've started daily consolidation first. Does that mean gold is going to follow tomorrow? Worth watching for. Same thing as SPY and QQQ. GDX bulls must confirm a daily uptrend if we are going to see any bounce follow through. And then we zoom out and we scout a weekly lower high to be the result of that bounce. And oil is on the verge of key 2-day tightening range resistance. 80.78 is being tested. We would need a break of 78.32 if it were going to be a convincing rejection. If we get over 80.78, it'll be notable. We will have to break 82.90 to confirm it with follow through, but oil bulls very pleased that they are at least testing resistance in this tightening range. Energy sector also still holding on to the bounce. Weekly tightening range on the energy sector. This is worth watching. When this breaks, volatility is going to pick up a good bit. All right, that's where we stand heading into tomorrow. Watching for daily consolidation. Watching for daily higher lows unless we start to get red flags. All major sectors at the lows of the day together. Increasing bear volume would be a couple of potential red flags. Names with tons of space for hourly lower highs from here. Hope you had a great weekend. Do your research before going to the Gulf Coast of Florida or Texas or wherever it is. I couldn't have known in advance because it just shifted and came very recently, and I booked this trip 5-6 weeks ago. But it's definitely going to stick in my memory the next time I go down to Florida. I like the East Coast a bit better. There's also some waves down there. All right. Do good things.
Whenever I take a break from the markets, it's extremely important that upon my return, I dive right back into my normal day-to-day routine. It's that routine and that habit that allows me to jump back in without missing a beat if I'm going to find consistency and flow state and not disrupt myself by taking that break. At the end of this month, I'm going to go in depth in a webinar talking about habits and routines, this very important aspect of our trading that's a little bit underaddressed.